Good morning to this exciting forum for this morning on intra-Africa trade and capital flows. It's a longer title, but I won't go through all of it. This session today was actually well teed up yesterday when we were challenged on why so much of a focus on mobilizing capital as opposed to mobilizing trade within Africa as a growth engine. So we're going to be discussing trade in that context today, and hopefully we can answer the other side of the growth engine, which is trade, over and above what we've spoken about in terms of mobilizing capital. But before I start, I also just want to put another context, which is we all know that intra-Africa trade at the moment hovers around 15% as a regional trade area, and the average globally is about 40%. And of course, we saw a slide yesterday on Asia. The fact Asia's already reached about 60% regional trade as an area. So there's a massive gap between where Africa is at 15% versus where Asia is now at about 60%. However, there are other markets that have chosen to drive economic growth through trade with bilateral partners that have given them the growth that they require and don't necessarily subscribe to the argument that your best trade partner is your neighbor. So just putting it to the panel, and I can start with Cyril at the end. What is your view around what is more important? Is the objective for Africa that we drive trade and grow trade as a growth driver for the continent, or is it mostly to focus on intra-Africa trade and the benefits between the two?
Well, thank you. Thank you very much, Crosby. First of all, appreciate for inviting our Afrexim Bank to participate. And we, I think, believe both trade within Africa, which we term as intra-African trade at the bank, and extra-African trade are necessary. The continent, as it stands, remains a net importer, more or less. A few countries that are not in that position on the continent, about 2 or 3. Therefore, trade with the rest of the world remains very key. But then we are intentionally, at least from the Afrexim Bank point of view, we're intentionally working on the process of growing internal intra-African value chains. We are carrying out a process of remapping the trade routes on the continent. Unfortunately, most of the trade routes that we have were prescribed to us by, I know I come from East Africa, and the rail line we have was inherited. We inherited it from the builders who are coolies, who came for certain reasons, and you have this rail line going to different points in my country, in Uganda, for example. It goes somewhere where we are getting copper, and that copper was going somewhere, all right? So we are reworking the trade routes across the continent, together with a few, what we call intra-African trade champions at the bank. Of course, we know Dangote, that are intentional about this. And therefore, we hope that with time, if we give it time and we remain deliberate and collaborate together with financial institutions, with central banks, with governments, I think we'll shape and grow and grow the trade, the intra-African trade, but also reduce the trade finance gap on the continent. So for me, or for us as a Afrexim Bank, the two are necessary. And I'll probably have an opportunity to give more details on what some of the actions that we've taken since we launched the intra-African trade. First of all, department. Some of you must have participated in the Intra-African Trade Fair. We hosted it here in Durban 6 years ago. Last year it was in Algeria, and next year it will be in Nigeria. And so many other things that we're doing to make sure that we allow Africans and the rest of the world to know the capabilities that are within the continent, and therefore, they get to know where they can source some of these goods and services that they require, which are available on the continent.
Excellent.
Thank you.
Thank you. So Cyril's going to sit on the fence on that one. Fatima, what's your views?
I'm going to join him on the fence. So really my view is that Africa's integration has a number of challenges, and these are significantly different to some of the countries you referenced earlier on, i.e. Brazil, India, etc. My belief, or our belief at DHL, is that we need trade negotiations to be taken from an African standpoint, for Africa, by Africans. Okay? And what that means is that ultimately a combined approach is in fact the necessary approach for the future of Africa. Neither trade approach, intra-African or global, is inherently better than the other. What they do have is they have fundamental benefits that can be offered if used effectively. DHL's approach is very similar to that of Afrexim, and in fact we're partners in some of the intra-Africa trade initiatives taking place. We certainly believe that the fundamental base and starting point has to be intra-Africa trade, because that will build the industrial capacity on the continent, and then you can bolster that with external trade, which will then deliver scale, technological access, etc. I think the main thing, and just to throw some numbers out there to whet the appetite, you referenced that intra-Africa trade is hovering around 14-15%, and Asia is around 60%. If you take intra-Africa trade in 2024, it was estimated to be around $220 billion, which represented a 12.4% growth year on year. Now that's a phenomenal achievement, right? But context is important, because that's only 14 to 15%. If you look at AFTA, what they have indicated is that the opportunity that we face in Africa is an income opportunity of $450 billion. And that's where we need to focus. So, on the fence with Cyril.
Excellent, but highlighted a number of reasons why intra-Africa trade, I think, is important. Colin, that fence is going to fall over if you stay on it. What's your thoughts?
Yeah, I mean, it's an interesting topic. You know, we are in the logistics business, and we move commodities out of the continent, and we move finished goods into the continent. So, you know, our challenge is to try and balance those that logistics flow. And for many, many years, the continent has been an exporter of unbeneficiated commodities and an importer of microwave ovens and kettles. And that has to change. And certainly in the last 3 years, we've seen some of that change, which is quite exciting for us. The Deputy Governor of Reserve Bank of Zimbabwe was talking about steel manufacture in Zimbabwe. In my time, 35 years in this business and traveling around the sub-region, we found that very exciting, and we didn't believe that South Africa would be importing semi-finished steel from Zimbabwe. I think that's a great achievement. We're seeing green shoots in southern Mozambique. We are importing pipes. Lithium battery factory going up in Ndola in Zambia, where Zambia has been a net exporter of cobalt, out of the DRC, net exporter of cobalt, but we're seeing lithium batteries being produced, and copper rod. You know, we've exported copper cathode, raw material. Now we're producing copper rod in Zambia. So we are seeing some of that manufacturing, that production, and that being traded with our brothers and sisters on the subcontinent. So I think that's quite exciting.
Excellent, thank you. Do you want to round us up, please?
Yes, thank you. Thank you, Crosby, for the opportunity to be here today. Really appreciate that. I think listening to Fatima speak, I think I echo that sentiment. I think from an intra-Africa perspective, with the trade flows in Africa constituting roughly 15%, we have a long way to go. Fatima highlighted the Asia number at 60%. We know Europe is sitting at 70%. But there are structural things that we need to ask ourselves. So why aren't we seeing the same amount of trade that we see in markets like Brazil or India, for example? And I think that we need to recognize some of the structural realities that we are faced with on the continent. One of those structural realities is that we operate in 54 markets across the continent, and those 54 markets come with its own regulatory obligations. It comes with its own localization rules. It is 54 markets that operate across 42 different currencies. So the complexity around FX is much more involved than it would be in some of the other markets globally. And so then I think that, from a MasterCard point of view, we ask ourselves, how do we bring that together in a way that creates a more cohesive operating environment? And how do we deal with some of the structural issues? And we think that it can be unpacked around 4 very distinct areas. I think the first areas is that we need to think about instant settlement. So we need to speed up the rate of flow and value exchange, and we need to do so across the rails. I think there needs to be a recognition also, secondly, that the cost of remittances intra-Africa is just far beyond what it should be. The UN benchmark, the SDG of the UN, sets that benchmark at around 3%. Africa's way above that number. And we need to work around that. I think, also to Fatima's point, there's a very real structural issue around logistics, the way that we think about the infrastructure creation around logistics. And I think that the last thing to point out is access, which we can talk about a little bit later. And it's access not just in terms of, access to markets, but the ability for, the smaller micro enterprises across the continent to actually access more formalized markets and thereby participate in the flows. And I think that there's a large amount of anonymity that is excluded from the numbers that we're looking at today because we don't have a recognition of where those flows come from.
Excellent, thank you so much. Maybe let's just turn this into the opportunity. So we've covered the why we think trade is important and the role that it plays. And maybe, Colin, if I just start with you, what do you think the biggest opportunity in your industry that you see that if we improve or able to make a breakthrough in certain areas, we could see a transformative growth? What excites you? What do you think the biggest opportunities are?
Yeah, I think it's an awesome time to be an African. All the two superpowers want to court us. They want our raw materials. We've got infrastructure gaps in the sub-region. From a logistics point of view, we spend most of our time, we wake up early in the morning thinking about how we can bridge those infrastructure gaps to ensure that we ensure route to market for our customers, how we can balance the exports with the imports, how we can de-bottleneck some of the corridors, and we run on all 8 different corridors feeding in and out of the sub-region, and that's a wonderful opportunity for our business, and I think it's a wonderful opportunity for Africa. Obviously, the DRC is the biggest producer of, well, certainly the second biggest producer of copper in the world. It's the biggest producer of cobalt in the world. The Zimbabwe, lithium, chrome. South Africa's got exports 70% of the world's manganese. So that's a really, really powerful place for our region to be placed. And obviously there are constraints, settlement, etc., etc.
No, excellent. And we'll cover what the challenges are and how we might overcome them. Fatima, what is your view on what the opportunities are from your industry perspective?
Whilst I support everything that Colin said, and I agree, I have a slightly different perspective, and that's purely because I'm with DHL Express. So we transport urgent, time-critical, super-sensitive shipments, and that has a different angle and a different perspective that needs to be considered. And for us, really, what we see is that there is so much potential on the continent. Traders are trading smarter. Trade is moving across borders, but what we have is complexity that was already referred to here. 54 different customs regimes, 54 different sets of documents, 54 different approaches to tariffs. etc. So for us, the opportunity lies in simplification, and the opportunity lies in something that that was chatted about in the fireside earlier on, AI, and the role that technology will play in simplifying the clearance of those goods, the movement of those goods, the tariff coding of those goods across border. And so you're wondering, okay, well, simplification, how is that an opportunity? Well, it's an opportunity because it will enable our SMEs to more effectively trade across borders, and that's where the key is. 80% of the employment of this continent lies with SMEs. 90% of the contribution to the GDP in most of the countries in Africa come from SMEs. Yet they are the ones that are mostly excluded from trading across borders due to the complexity. They don't have the appetite, they don't have the skill set, they don't have the support to be able to do that. So the opportunity lies in organizations like all of us on this stage right now, engaging in partnerships with governments, customs officials, etc., to ensure the simplification of trade across borders.
Excellent. I think simplification we can all buy into. But Gabriel, there's an interesting connect here. You mentioned earlier about payments, and if we can make payments more instant, that would create opportunity for us. And of course, DHL is talking about moving urgent, goods across the continent. You would imagine instant payment has got a big role to play there. But just connecting those two dots, and then just generally for you, what do you think the opportunities sets are for us in improving trade in the continent?
Yeah, thank you. I think the focus has to be on the smaller micro enterprises environment. It really is where the future growth is going to come from. And so when we consider the flow or value exchange with small and micro enterprises across the continent, do we really believe that we've got visibility of the flows? And I think that the reality is no, we don't. I think we see some of it, but the formalization of those flows are important, and it's important for three things. It's firstly important for credit, it's important for insurance purposes, if you think about the logistical angle, and thirdly, it's important for working capital.
Yeah.
And working capital not just in terms of allowing those businesses to grow, but working capital also then to expand the access to markets that would increase those flows. Now, from our perspective, we look at that and we think, okay, well, could we then drive some exponential growth to lift that 15% of intra-Africa flow? But if we were to consider those 3 points that I've mentioned, specifically around the credit and working capital, we need to ensure that from outside, from a global perspective, the inflows into Africa is done in a cohesive way that's got the necessary availability, happens instantaneously, and then open up those environments for additional trade. And so to do that, we've done a lot of work over the last 3 years to position a service called MasterCard Move. It's available across 200 markets globally, with more than 150 settlement currencies that actually allowed those flows. And considering the smaller micro enterprises environment, it's absolutely fit for purpose for allowing that value exchange and allowing it to happen in a clear and cohesive manner.
No, interesting. We always talk about mobilizing large capital flows, particularly for things like infrastructure and energy on the continent. But the two of you have raised the importance of supporting SMEs in moving goods across the continent, because that supports another level of growth and employment on the continent, which is critical. And nobody thought 10 years ago that remittances would be one of the largest sort of flows of capital into the continent as well. So we've actually got to look right across the spectrum and not be overly focused on one area. For you, Cyril, just what do you think the opportunities are?
No, thank you very much. I think for the past 10 years, the bank looked at trade enabling. So we carry out a questionnaire every year where we look at the trade finance gap on the continent. We share this questionnaire with the different players in the market, and we gave feedback. So we got a list of the reasons why the trade finance gap then was low. It was not where it is. We actually believe it is not 15%. We do believe that there's a lot of trade that is not captured yet in the data, in the statistics. The trade that happens across the borders, so there's still a lot of work to do. But in terms of the opportunities that we then tried to develop out of the feedback that we got from the respondents, we created the Africa Trade Gateway, which we call the ATG. In the Africa Trade Gateway, we have tried to create an ecosystem that enables traders in member states to access, it can be SMEs, it could be large corporates, to access what we thought were some of the things that were missing in the ecosystem then. We talk about information, transparency, who knows this entity? The bankers call it know your customer information or customer due diligence information. So at Afrexim Bank, we created what we call the Mansa platform. Mansa allows you to upload your information, incorporation documents, identifications, and once you put it there in this secure platform, it enables everyone that wants to trade with you or interact with you know that you're a verified entity in country X with this address. Because that was one of the challenges that had come out of the questionnaire. The other one is, of course, Pan-African payment and settlement systems, which we're very, very excited about. We looked at the over-reliance on the hard currencies to settle trade that is within the continent, trade between Zimbabwe and Zambia having to be paid maybe in paid and settled in Japanese yen. All right, and as a bank, we launched the Pan-African payments and settlement system, where we work with financial institutions to make sure that there is a way that the buyer and the seller can use their own currencies to facilitate and complete the trade. And then the financial institutions can do the currency conversion issue. It's not upon the buyers or the sellers to be shouldering this burden of managing the currencies. The other one is the trade link. Yep. The trade link in the ATG is more of the payables, and that speaks to our SMEs. Payables financing, where if we have an anchor buyer, we have one strong buyer that receives goods or is being serviced by very many small enterprises, we can actually look at this strong buyer. We give them access to this system, and all their customers will launch their invoices in this system, and if these invoices are verified by the strong buyer, we're able, as a Afrexim Bank, or using any other financial institution that partners with us to release liquidity for these small-scale enterprises. The other is trader. Trader is more of information, market information, especially if you're in South Africa and you want to go and invest in Morocco, for example, in Egypt, where I work, and you've never been there. You can actually get access to the database and receive information about Morocco to a level that at least allows you to know, how is the market in Morocco, to build your confidence in your decision making. Yeah.
Thank you.
These are opportunities that we welcome, Standard Bank to join us, my fellow panelists to join us, and the audience.
Excellent. That is an exciting development. Bulelo, I don't know if we're charging for advertising space on the on the panel, but we'll send you guys the invoices. I've had 2 sales pitches while we're up here, so we might as well balance it out. Colin, just talk to us from your point of view, your entity. What are you guys doing, and what do you think? Maybe you want to profile in practical examples of how some of your initiatives have unlocked or are unlocking trade. It's a free sales pitch.
Free, thank you. Yeah, so the opportunities I touched on, but obviously the challenges are such that basically we break it down to three challenges: infrastructure, regulation, and counterparty settlement and forex volatility.
Yep.
The opportunities are, I mean, the friction points are, as I touch on infrastructure. We are on a mission to re-rail commodities through Southern Africa, and everyone who has played in the Southern African pool will know that rail has been sidelined for many decades, and we've successfully debottlenecked some of these corridors by putting in our own rolling stock and signing access agreements with some of our neighboring countries. And we've done that successfully for the last 10 odd years. And that is just, those opportunities are expanding, every year as the exports out of our region increases. And like we heard Felix talk about Zambia's ambitions of taking copper production to 3 million tons. Congo is at 3 million tons. We're talking about 6 million tons of copper that the world is looking for. And so debottlenecking infrastructure is really what we spend our time doing, whether it's ports, railways, corridors, etc.
Excellent, thank you. That's incredibly valuable work for the economies. Fatima, I have to give you your sales pitch as well.
Yeah. Again, same but different. The key challenge really does lie in infrastructure, but different perspectives of infrastructure. Colin has spoken about ports, etc. With ours, perhaps I'd like to touch on the air connectivity gaps. And I have some colleagues here from the aviation sector, and they certainly know, and they have a strategy on how to address that. But one of the key things we know is a primary challenge in Africa is the cost of logistics. And the cost of logistics is significantly higher than any other continent simply because we have these air connectivity gaps. The cargo space availability in terms of direct routes linking African countries, neighboring countries, etc., in the continent is a real hamper. More often than not, we have to leave the continent to fly back to the continent. And that is a huge cost and obviously impacts traders on the continent. Secondly, added to that is this concept that I'll just touch on very briefly, which is the de minimis. Now, I'm not sure if many of you understand the de minimis, but in essence, it's the taxes that countries charge for imported goods and the levels in which they determine that. And we still have very strong protectionist strategies in the countries in Africa. It's very often seen as a great source of revenue for countries, the duties and taxes on inbound goods. But there's a different angle that I really want to point out around the challenges. And that is because those de minimis are so high and they protect local business, what they enable them to do is to become complacent and uncompetitive globally. So they are not cutting edge, they are not driving their products forward like they should be. And at the end of the day, the African consumer is the loser. So those are some of the challenges. I mean, there are many others that we can touch on, but to give you two different perspectives to perhaps what we have discussed.
Thank you. And I have a new word which I must pronounce correctly, de minimis. I'm happy to open up for Q&A whilst we've got the panel on stage. Any questions? There's one, two.
Thank you, Crosby. Richard Callan, Professor of Law and Governance, Cambridge University Institute for Sustainability Leadership. I was reviewing a paper we commissioned last night on financial flows into Kenya. And the paper argues, and I'm kind of extending my remit to you to peer review it with me here. The paper argues that there's a lot to be learned from the digital transformation technology stuff that happened in Kenya, M-Pesa, for example, iconic project. that kind of innovation, do you think that could break some of the barriers? Are there good lessons to be learned that could lead to, I'm kind of looking at you, Fatima, that could lead to the financial system renovation, ecosystem transformation we need? Thank you.
Thank you. You can answer for them, but I think, Gabe, you might want to as well from a MasterCard. Let's take the second question, so we'll give my panelists time to think about an intelligent answer. There's one more here as well.
Thanks. A quick one, just to pick up on the conversation around the role of infrastructure, and specifically I want to, if maybe Colin and maybe Fatima, insofar as the role it has and the potential for industrialization point of view. As you indicated in your opening remarks, you spoke about a lot more of exporting of raw materials rather than finished goods. Thanks.
Cool. We'll take the answers and then we'll take one more question after.
Yes. So my question is more related to the first one and perhaps addressed to Gabrielle and Cyril. And it's about the impact of stablecoin, and we know that Africans have, are great users of cryptocurrencies generally speaking, but I want to stay on stablecoins in particular, and to what extent actually your initiatives are taking into account that new way of transacting. Thank you.
Do you want to start transformation of using M-Pesa as a background and then stablecoins?
Yeah, sure. So I think M-Pesa plays a critical domestic role currently, and I think that the proliferation of M-Pesa since 2007 has, I think, been just absolutely astounding. I was participating in a talk last week, and according to the GSMA, total flows globally for mobile money is sitting at about $1.8 trillion, of which 1.4 trillion is in Africa. And of that, M-Pesa's got a massive chunk. So I think to not recognize the importance of M-Pesa is a big mistake. I think the challenge, though, is that we are increasingly operating in a world that's mobile first, and that requires almost ubiquitous digitization across all different types of flows. So if you think about mobile money, it was predominantly predicated on the domestic send money home use case, the ability to allow urban workers to send money back to where they come from. And I think that what we require, if we were to consider intra-African trade, is some sort of uniformity around fostering interoperability, the alignment of value exchange between governments from an interoperability perspective, where we recognize that ultimate digital value exchange has to meet the requirements of governments when they think about their own ambitions from a digital public infrastructure perspective, but also then satisfy the requirements of a new upcoming Generation Z that wants to be digitally native, wants to see instant settlement, and want to make sure that there's some level of standardization in terms of those flows. So I think as an endpoint, or as the last mile, if you want, I think M-Pesa's got an absolutely critical role to play. And I would then extend that to say that M-Pesa becomes an example of account-to-account based payments across the continent. And the success thereof could be predicated on the ability to drive interoperability and to do so almost at the utility level with a cost base that could be equal to or mimic cash.
Yeah. Cool. Colin and Fatima, standing between coffee and the rest of us.
So we
On the
answer
infrastructure
the
question,
infrastructure deficit, what impact it has on intra-Africa trade, and yeah, absolutely, it's brutal. It's brutal for our continent, and I'll give you a very quick example. To import sugar from Brazil, your ocean freight from main port Brazil to Cape Town is about $35 a ton. To road haul sugar from sugar producing area in South Africa, Durban, to Cape Town is $45 a ton. So there's a $10 differential between road transporting from Durban to Cape Town versus Brazil to Cape Town. So we should be shipping that sugar from Durban to Cape Town, or putting it on rail from Durban to Cape Town. And I'm not saying that's the demise of Tongaat Hulett at all, but that is a real live example of how are poor, and yes, we have got poor logistics infrastructure to move the kind of commodities and to industrialize our sub-region. I hope that answers your question.
That's true.
So again, a slightly different and an interesting take on the same infrastructure is around the fact of the type of infrastructure that needs to be used. Colin references, road, rail, port, etc. Our interest lies in the aviation and the air infrastructure. And again, it's the same thing, right? If we can get the different modes of infrastructure working effectively, the industrialization growth in Africa will assist us and will then help drive exports. Why is that important, and how does that tie to aviation? Well, it's very simple. A plane flies into Africa full to the brim because we import so much. But it has to go back there to come back again. So airlines have a double rotation. The problem is only one rotation is full, and the return leg is going out with 10, 12% capacity. So when you're working out the cost per kilogram to ship an item, you have to work the cost per kilogram on the total cost rotation of that plane. So therein lies the conundrum around, yes, you want to get it out there quickly and you want to import your goods quickly and you want to export your goods quickly, but the cost of doing that is so significantly more. So we have to be able to fix the infrastructure that Colin's talking about. We have to be able to fix the intra-Africa trade to get that industrialized capacity up so that we have exportable volumes.
Yeah.
And the second we have exportable volumes, you will then get the drop in the logistics cost, and it'll all become, a circular kind of situation, constantly feeding each other.
Awesome. You've done 2 plugs and encouragements for Ethiopian Airlines that I've
Well, they
I've heard
owe
in the
me.
room.
I'll be collecting after this.
Excellent. Thank you very much for your attention. I know we held you to coffee, and then thank you for my panelists. It was a great discussion. Thank you.
Thank you.